Hello guys, welcome again. Let us now start. We will start by learning about uptrend. When say about uptrend, I mean that market is moving, let us say this way. Okay, that is uptrend. So here, when the market moving in this way, we expect that everyone in this market is buying. Okay, so when everyone is buying, despite there is number of sellers in this market, they are trying to push the market down, but the buyers have a lot of strength to push market to the upward direction. Okay, so this trend is a bullish trend or upward trend. Okay, so before we are going to identify another trend, let us identify this point. You see, when the market is moving this way, then return to this point, then push a little bit to the top, then pull a little bit, then push, then pull a little bit, then push. That is called a retest. You see, the market is moving, then pull back. So this is like a retracement, this area here. But here at this point is called break of structure. This point is break of structure. You see, this point is a break of structure, then this point is a break of structure. This, all of that up to this area is a break of structure. Okay guys, so if this area is a break of structure, then why I say it's the break of structure, because you see the market is moving this way, then move this way. So this is a break of structure because this trend from here up to this point is higher than this area here. You see, it has break the previous higher, so the current highest point is now here. You see, the market is like move up to this area, so the highest point at this area is here. So when the market is moved past to that point here, is called a break of structure. I think now guys you have understand. If you are not understand, text me and put something in comment section, then I'll see, then I'll text back. Okay, then I will repost many video like this about uptrend. So let us follow about downtrend. So if it's a downtrend, the market is moving this way, moving this way. So for downtrend, the break of structure is here. Here is a break of structure, then here is a break of structure, then here is another break of structure. Obvious, when the market moving this way is called downtrend. So number of sellers is higher than in this scenario. The number of or a percentage of sellers in the market is more or dominant than the percentage of buyers. So the market is keep moving on the downside or moving on the bottom. So that is a break of structure, break of structure, break of structure. For uptrend, the break of structure is found on left side, then break of structure on left side on the top, then the break of structure is found on downtrend on the left side. Maybe I can say in left side, I can say it is internally, or guys, how to you will learn. It is according how you can identify it for yourself. But this is a break for structure for downtrend. I think you have understood that, because you see the market is moving this way, then pull back. So here is the highest point of the downward. So when it move again, the trend move again to pass the previous highest point, then this is called a break of structure, because the market shift to the lower or to the lowest point than the previous point. Then after identifying the break of structure, okay, now we are going to, so this is a uptrend, this is a downtrend, this is a downtrend, then this is uptrend. So this scenario here, this scenario is a bullish scenario, then here is a bearish scenario, this is a bearish scenario, this is a bullish scenario, because the market is moving upward. So when it's moving upward, the market, we expect everyone here to buy. Then if it moves to the bottom or downside, we expect everyone at this area to sell. So far we have two types of market structure. We have trend market and we have consolidation or range market. So this a trend market, we have uptrend and downtrend. Okay, let's write up two types of market, structure. Don't worry for my bad handwriting, guys. I hope my sound is clear. Okay, don't worry for my bad handwriting. Okay, so we have two type of market structure. We have uptrend and we have, okay, sorry, we have trend market, and we have trend market, and we have consolidation. Consolidation is always also called a range market. So these two is type of market structure. Then in a trend market, we have now uptrend and we have downtrend. For a trend market, we have uptrend then and downtrend. Then consolidation or range market, it's look like the market is moving in a well, okay, moving like this. So this is a channel. So the market is moving in this channel, in between of this level. So this is now a consolidation market. The buyers buy at that bottom, set their stop loss at this area, then sellers sell at the top, then put stop loss on the upside. So when the market reach at this point, they take profit in this area. Then buyers, when buy at this area, then expected to set their take profit at this point. So that is consolidation or a range market. So now you have understand about consolidation and trend market. Now let us put all of these things together. So when the market can start, it's moving like, it's like, okay, first of all, we have a trading sessions. Number one, we have Tokyo. Number two, we have London. Number three, we have New York. How New York is writing, guys? Let us say New York. Okay, number one is Tokyo. Market start around 12 p.m. 12 a.m. East Africa Standard Time, then London, followed by 11 from 10:30 from 10:30 to around 4. Then New York start from 1 p.m. to 8 p.m. Then followed by Sydney session. We follow number 5, number 4 we follow by Sydney. Okay, so number 1, the market start Tokyo. So let us start the section of Tokyo. When the market start at around 12 a.m. Eastern Standard Time, then market is moving this way. These are consolidation. Market is moving in a range. Okay, so after all, the market pushed to the downside maybe around 4 or around 7 a.m. Then return to the channel, push beyond the channel, then do what? Retest. After retest, market move to the upside, which is now continue to the top. Now after reaching at this area, maybe it's around now, and so after when the market is moving in this range is when the London session, Tokyo session is open. Then it's moved to the push beyond. That's it breaks through that channel, then move, push down, then pull back to the channel, then push beyond the channel again, pull or break the channel, then retest. When return to this area, then we can enter to buy at this area. We buy at this area when the market return to retest. Okay, then we continue by the trend. Then after reach to the highest point, then the market will also always do some consolidation at this point. Then so maybe when the when the trend is strong like this, it's mean like sometime it's in Tokyo and London session. You see I say London session. This London session is open around 8. It's around 8:30. Yes, it's around 8:30 a.m. in Kenya time. Then when it's around 10, then it went up to 4 p.m. Then New York session is open around 1 p.m. So it's 1 p.m. Then it's open 8 a.m. up to 4 p.m. This went to up to 8 p.m. So when London session, when it's reach around 1 a.m., so the time overlap, this is called kill zone, because there is a time overlap between London session and New York session. When there is a time overlap at this session, then there is a lot of liquidity in the market. When I say about liquidity, I mean there's a lot of money that pulled in the market. So that is why the trader call a kill zone. This is when around 1 p.m. Okay, Eastern Standard Time. Okay, now when the market reaches the highest point, then do again some consolidation, then start to pull again up to this area, our previous demand zone. This is our demand zone. Return. Okay, I mean when the market push to the highest point, then return to the origin point. It's like you draw a stone it's like you draw a stone